Good morning. We'll get started in just a sec.
I have a 769 number for you before. That's your cell, right? This one's showing up as a 504.
Good morning, everyone. Welcome to another forms class. Today we have slated form 22A. We're going to go the financing contingency. Next week we will be doing the new buyer's agency agreement. I'm working with the Northwest MLS. I'm trying to get the forms manual to utilize for training for next week. I'm really hoping I can get my hands on that. It'll make it way easier to not only see the actual form itself, because the red line and the blue line forms that they give us for examples, it's confusing. The form is it's pretty much a whole new form. And when they do that, and there's so much line crossing and stuff like that, it's really messy and it's hard to like read. I've had probably 4 or 5 different conversations with people who've been basically already going over them and trying to read them and to understand and to get ahead of this. And they even said too, like, man, I wish we could see the actual form, because this is it's confusing. You know, it's really hard to try to train off of something when it's like that. So I'm gonna reach out again today to Jeannie Simpson at the Northwest MLS, one of the lead attorneys, to see if there's any possibility at all at getting that. So last week, as you remember, we did do Form 21, and we did part 2. So we wrapped up everything, and it was really good because that's basically a full month of contract training that we really did. We went through all of the residential and all of the commercial. Or yeah, it was multifamily, right? Multifamily. So we did the multifamily and then residential. So now it's time to kind of like dive into the different addendums that go along with those forms. And if you remember the Jerry Maguire clause, right? What does that mean?
Show me the money.
Show me the money. Where's the money? Like, where's the money? Like, is it in checkings or in savings? Right? That's the thing you have to get into a habit of asking.
Grandma's not right in your check.
Yeah, exactly. No gift funds, no money in an IRA, no money in the stock market, no Bitcoin, no IOUs. It doesn't really matter. US funds, checkings, savings. That is the Jerry Maguire clause, basically, to sum up item A in our boilerplate language of the form. So it's so funny, like we go over it. Already last week, I had 3 deals where brokers are like, oh yeah, we got an offer. They say it's all cash. And you guys already know, what are all offers anyway?
Cash.
They're all cash anyway, unless otherwise specified in the agreement, right? That's the part that it clearly says that it's already all cash. So you don't need to like write an offer, and if it was all cash, you write cash on the front page of the deal. Have you seen this a million times? Yes.
Oh yeah.
Oh yeah. Like, what are you talking about? The paperwork already says it's all cash unless you say it's different. So we are going to go over one of the forms that is otherwise specified in the agreement today. And this is one of the primary ones, which is financing. Is the buyer getting financing? So let me share my screen. And we do what we do. We use the forms manual, and we shall, let me move this thing down. I hate that thing. We'll use manual, and we'll go over this. Actually, before I jump into this, let me take a look real quick to see, because I thought there were a couple changes on this. I want to see the red lines real quick. I'll get the legal bulletins. Get the latest. And quick. Okay, so there's no changes to 22A. I just want to be 100% positive. All right, so use. This addendum is to be attached to a purchase and sale agreement when the sale is conditioned upon buyer obtaining financing. Attach a copy to every copy of the purchase and sale agreement. If there is seller financing, do not use this form. Use the payment terms addendum form 22C. So there is a completely separate form in the event seller is doing seller financing. That includes wraps, that includes assumptions, or straight up owner financing, contract, note and deed of trust, right? Any of those ways, you're gonna use the 22C, not a 22A, which we saw that 2 weeks ago. Someone put it on a 22A.
So instead of a 21A, you would use that one.
Instead of a 22A, which we're going on
Yeah.
today, yeah, you would
So you
use the
wouldn't use that
22C.
one.
You wouldn't even have that at all, yeah. It is definitely one of the pretty, very, very complicated form. I mean, it really is. Because it doesn't get used often and most people don't understand it's like a multiple choice kind of form. So we will obviously do that one again, like we always do. But we wanted to get through and really dive in on all the new forms that are coming on those ones first to really make sure everybody's up to speed before we, hit the first of the year. So we're gonna be diving in on all of those ones first. And then we will get back to our regular rotation, which our next one will be 22B. So we'll do the contingent sale, which will be when we get back in our normal rotation. All right, assistance filling in the blanks. Following numbers refer to the numbers on the sample of form shown in this manual. That's the beauty of forms manual. If you ever have questions and you're confused, you're like, what does this mean on the form? If you use the manuals, you can see the numbers and it's numbered to each thing. You can click it and it'll explain exactly what that paragraph means. Makes it very, very easy. If you ever get tripped up and you're like, I don't understand what this means, or I don't remember, boom, jump in, go to the manual. The manual is in transaction desk as well. So you can easily get to those. All right, so assistance in filling in the blanks, date of the purchase and sale agreement, insert the same date that's at the top of the first page, purchase and sale agreement, buyer's name, seller's name, property, insert the property address as on the purchase and sale agreement. Next is financing. Select the type of financing for which buyer will make application. How are you gonna know that?
Talk to the lender.
You talk to the lender. I asked Mr. Aaron and Miss Leah to be here today that we could kind of talk about some things that they handle with this form as well, because I know that there are brokers that literally will write a deal for a buyer and they don't even meet with the lender. What does a buyer have to do? Aaron, what do they gotta do? What's the first steps that you guys, start the process?
When we first meet them?
Yeah.
Yeah, I mean, we sit down and just kind of figure what they're trying to accomplish. I think that's the first thing, right? So, hey, what are you looking to do? What are your goals? Kind of do the consulting piece. But then once we kind of figure out when they do the pre-qualification and everything else, we'll have an idea. And so, we've filtered all those different options out that were best for them. And so at that point, then, once they get the pre-approval, the full approval, whatever we're doing, they'll let you know. Because if you work as a team, right? So the whole idea is, hey, you just don't submit the offer and then you call the mortgage guy or lender and say, hey, look, hey, I'm so-and-so, what are we doing? You know what I mean? Like, it's more of like a collaborative effect that we work together with. So if you're looking at houses for that weekend, I'll say, hey, what houses you're looking at? We got these three, great. Here's some payment scenarios, or let me know, I'll be around this weekend, so if you find something you really like, let's plug in those programs and figure out what to expect. And then when you make the offer, you just let me know, hey, what offer are you going with? Kind of a loan program, there you go. We're all on the same page.
We go over like closing times.
Yeah.
If
stuff
you
like
wanna
that,
ask
yeah.
for seller concessions or certain limits based on the down payment of the borrower, we've got a lot of different things that.
Yeah, or we talk about, when we're gonna, like you said, when we're gonna close, right?
Yeah.
Can we close in 10 days? Yeah. Or is it closing in 2 weeks? It's really important to the seller, can we do this? So that's kind of
And so it's the same thing that you guys do, we do. It's a consultation time. It's to figure out their goals and their wants and their needs. And then, of course, you've got to do the structure of the actual loan itself and finding out, okay, what's the credit look like? What's their job history, income, tax returns, assets,
Self-employment.
self-employment, and you're like, oh boy. Then there's a lot more to it and entailed on what you guys do, but it's extremely important to communicate really well with a team. I mean, that is one thing that will either make or break you in this business and obviously for each and every deal. What do you guys do? Like, what's your process for figuring out best scenarios for like loan types? And I mean, some of it's obvious, some of it's not so obvious.
Yeah. I mean, if you throw a condo
Mm.
into the situation, right? They have different guidelines based on FHA or EA or conventional. So you might switch somebody from FHA to conventional, but it would be a little more costly because their credit score is not quite there. Yeah, I mean, it depends.
Yeah, at the beginning, you go through all that stuff, right? So it's based on credit, income, and assets.
Yeah.
So we look at the credit, income, and assets. Credit's easy, right?
The CIA.
Right.
That's the CIA.
Yeah, the assets, you have it or you don't, and if you don't have it, where you get in front? This is some of the questions to be asked up front, so you can write the contract the right way, give fund, don't give fund, that kind of stuff.
Yeah.
And then the income pieces, the two challenge ones are the income and the asset. You might not do the asset, but if people are pulling money, they're not ready for it, we gotta document a bunch of stuff, and then we gotta do workarounds, get money and these other things. And the other part is the income piece, and then income piece might sound very straightforward. So, hey, I work at Amazon, I make $100,000 a year, easy, right? But yeah, I'm salaried, or I'm variable, I'm variable income, I have hourly income, I just switched jobs 2 months ago, I'm here.
I have commissions, I have bonus pay, or
Yeah,
I have different rates of hourly pay based on night shift or day shift and
That's
things can get a
true.
little.
So yeah, so anybody who's, a lot of it, everyone thinks the income's okay, but if you're self-employed and these other things. That's why it's super important just to get in front as soon as we can, so we can document I get that income and the assets squared away. Cause that'll kill you every time, or it looks like it's normal. Hey, look, I just met this client and they want to put an offer and, okay, and then it's a little more complicated, and now you want answers, and I can't really give you an answer. Cause we don't have it fully paid, we have the ability to have an underwriter validate all the information. If we have
Right.
enough time up front. Then this is the easy part, it's like painting, right? Everyone can paint, but it's the prep work and everything else before the paint,
Mhm.
taping and the moving, the cleaning and all that stuff like that is what was the way to do it.
True. All right, thank you for that input. All right, so selecting financing, get with your lender, work as a team, find out. Down payment, so number 6, insert the amount of the down payment. So put a dollar amount, example, $20,000, or a percentage of the purchase price, example, up to 20% of the purchase price, or at least 20% of the purchase price. Do not enter minimum down. This used to be an old school,
Yeah.
you remember that?
Oh, yeah.
All the time, minimum down. What is that? What is it? How much? Do they even qualify?
Mhm.
Oh my goodness, used to see that all the time. Yeah, I guess, but it still doesn't tell us anything. Because with some buyers and with some types of financing, the minimum down may be more than the buyer can afford. So that's why you never do this. In that case, buyer will lose the earnest money for failure to have sufficient funds to close. See section 4 of 22A, which we're going to dive in deep too about failed deals and where is the buyer's earnest money protected and where is it not. So we're going to dive into that too. Remember that the down payment is money produced by buyer in addition to the loans, and it is not appropriate to include the down payment monies that are the result of contingent source of financing, aka Jerry Maguire clause, right? So loan application deadline, let's see, Hayden, wanna hit 7?
Yeah, Insert the number of days buyer has to make application for the loan. Application is defined as submission of buyer's finance information for the purposes of obtaining an extension of credit, including buyer's name, income, social security number if required, the property address, an estimate of the value of the property, purchase price, and the loan amount.
Okay, so the loan application deadline is actually 5 days. This is 5 business days. We read computation of time 2 times last month in great detail to understand how it works. 5 and less, weekends and holidays don't count. 6 and greater, they count, but you can't land on a Saturday, Sunday, or legal holiday. That's the shortest explanation of computation of time. So you got 5 business days to get with your lender, make application. So, Aaron, is there anything else in detail that you do besides what we just read?
This is important. Because, okay, so I'll ask you guys this question. Sorry, you have to turn around heads. I'll ask you this question. So when the person does the pre-approval, right? They give me their credit, income, and assets. We put it all together. Here's the pre-approval. Is that an application? Why isn't it an application? Because read that again. What was the one line? Loan application is, where is it?
Is defined as submission of buyer's financial.
Where's it at? I can't see it.
It's
So-
There.
right there.
Buyer's financial information, okay? So again, buyer's name, I have that one. I have the income.
Mhm.
We have their social security number. I don't have the property address. Once the property address is identified, I have to make an application within 3 days. So that's the key. So a lot of times they go, oh, he's already made an application, he's done the pre-approval, even full approval.
Here, all the freaking
It's
time.
not. The thing that triggers us is the address. I know you're looking at something, and I guess technically, Leah, I know you're looking at a particular property with an address. I have to make an application, but imagine if we did it for every property, it'd be ridiculous. So the idea is it's not an application, even if we do the credit, income, and assets all ahead of time and have it all approved. It's not a formal application until we have that property address. So once I get that purchase and sales agreement with the property address, now I make an application. That starts our 3-day window of sending disclosures out to the buyer. But if you give me this form after 6 days, great, I'll make an application, but my application date is gonna be after the day of that 5-day window. Typically, it's not a huge deal, but sometimes, especially like I had one that was a contingent offer. Oh, did you get the offer or not? Oh, yeah, well, we got under contract, but we haven't found a buyer for my house.
Oh, and they never gave it to you?
Yeah, I got it like 2 weeks after
Oh,
the fact,
no.
right? So again, yeah, I knew it was gonna close. A good friend of mine, I'm like, what are you doing? Right, so, but I didn't know the other agent. That's the whole idea. So when we work together as a team, we protect, our job and Leah's job is to protect your client from stuff like this. And I've been many times, I'm like, hey, we're not sure if we got it, or I get it at the very end, I will just slam in an address to make sure we're protected. Before, I mean, if I get it and it's at the last time of it, and I haven't talked to the client, I gotta make this an application, we'll figure it out.
Mhm.
But the biggest thing is we wanna make sure we protect your client's money. So if you mess up, it's fine, that's why we're here, but we'll protect them, so they don't lose their innocence.
So Aaron, question for you. So is it 3 days? Like the only day that doesn't count is Sundays? Is that still the
So
case?
once we make application, I have to send our disclosures out to the buyer within 3 days.
Yes.
And that doesn't include a Sunday or holiday, okay?
So it's Sunday and holidays.
And
And the same thing will happen.
Leah, is it Saturday? I don't think it counts Saturday too
I
either.
think you can count Saturdays. Is
Well,
what I
it is,
told.
but if it's customary, if it's customary that we're open on Saturdays, then it counts as a Saturday. It's kind of weird. The CFPB says, hey, look, if you're open on Saturday, then you can count the day on
So you
Saturday.
are open.
But we're not, so I don't think we count Saturday.
Well, we are.
You
but
are.
The support staff isn't.
Correct, so technically we're off, so I think that's the
It's not
thing.
like a working day.
Correct.
But like, we don't.
We're not staff, yeah. So I know it's confusing, but
Yeah.
ultimately, we just have to get out within 3 days, okay? So that's the thing, so depending on when we get the application and everything else, or we get the address and the purchase and sales agreement. I just can't give me an address without a purchase and sales agreement. I don't have to really under contract, you know what I mean? I want a contract
Mhm.
to see it.
And you have to redo this again right before closing, correct? Once it's fully underwritten and approved.
Redo what?
you do the disclosure
Yeah,
again.
there's a closing disclosure,
Closing
so you have, so basically, if you think as a buyer, right?
Yeah.
At the beginning, here's the loan estimate with all the disclosures, here's what it's gonna cost.
Yep.
Then you have the closing disclosure at the end, or here's the actual cost. So you can compare the two, okay, so that's the concept, that's how they do that. But the biggest thing is for us is that making an application is that property address, like, don't have the property address, it's not an application. You don't meet the guideline, you don't need for this.
Mhm.
So, and the thing is, if you say you cut it back and you don't tell them, the best part is like, hey, we got under contract on Friday or Thursday, and you said they're gonna make applications in one day. I don't get the application until Monday. Hey, look, we got under contract on, earlier. I'm like, oh, shoot, I can't.
Can't do it, yeah.
I saw one where it says the one was already done. It said done on it. I'm like, how's it done? It said, how many days will you make applications? It's done. So. Sorry, I didn't mean to.
No, that's great. That's the kind of stuff why I wanted you
And
guys
they don't
here.
have to lock their interest rate to have a full application.
You do, right?
You don't,
Oh, you don't?
you can.
Because that's
Oh,
not
you
part of
can
the
put-
application.
oh, true.
Disclose it as just like, oh, not locked. And we can keep working on the file when they haven't locked. But the risk with that is interest rates first, and then they don't qualify.
You can't go back in time.
Yeah.
I think I'm gonna go back to that last one,
The
right?
joke that we have,
Just
or
kidding.
the saying that we
Yeah.
have in our loan business is that the locked loan is a closed loan.
Mm-hmm.
It's not locked, you can't close. So, and if you try to gamble, you just don't. I usually, when we get them, here's the rate today, what do you wanna do? Well, it's either gonna go up, stay the same, or go down. You know what I mean, which one you wanna do, and it's like buying a stock, so just. Here's what it is,
You just
be happy
jump
with
in.
it,
And if there's
Refi and
significant change, then
yeah, we'll
you could
refi later on.
negotiate. Yeah.
Cool. So here it is, buyer shall make a down payment in the amount of, we just read that one before. And then this is the part, buyer shall make application for the loans to pay the balance of the purchase price and pay the application fee if required for the subject property within, and default is 5 days. I think 5 days is enough. You can write 5. After mutual acceptance of this agreement, for the purposes of this addendum, application means the submission of buyer's financial information for the purposes of obtaining an extension of credit, including buyer's name, income, social security number, if required, the property address, purchase price, and the loan amount. If not waived, the financing contingency shall survive the closing date. I wanted to make sure we touched on this because we were going to talk about that one here a little bit too. It survives the closing date. What does that mean? Exactly. What do you guys think?
If the seller doesn't, request, to see if the buyer made the submission for the loan application within the 5 days, then, something happens at the end, and the buyer can always get their earnings money back because there was no financing contingency used from the seller. That's what I think.
You've got lots of correct information in there, but a little bit, you're missing like a little bit key elements. The easiest way to remember this is that the financing contingency actually goes on forever until it is waived. It will keep going and going and going. You could literally write a deal and I know we haven't gotten to section A yet, but we're going to be, but you could literally choose A, mark this box, and you could put 1 day here. Well, 1. And you have a closing date in 2 months. It means you can still get your earnest money back. All the way, even past closing, until the seller issues the notice to demand it to be waived. So option A and option B, we're going to dive in deeper in a second. It'll make more sense, but it's just, I got to make sure we point out right from the beginning, they're telling you that it's going to survive. That's what it means. It will survive the closing dates. The buyer is totally protected.
For example, like right there, it says 21 days, right?
Mhm.
Like 21 days. If not built in after mutual acceptance, the seller may give notice to perform.
Oh, did you read that, Kate, the keyword?
So like, if it's day 28 and they give you the notice to perform,
Mhm.
I don't see how it means like that. I'm a little bit confused. How does it survive, when we go back up to the top, financing contingency shall survive the closing date?
Mhm. What they're saying is that this, why is it, the reason it's up above it is because it's telling you that it's going to keep going. It will survive, like even past the closing date. Like it doesn't really matter when that closing date is. That the buyer is still protected for their financing until the seller has them waive it and they agree in writing to waive it. So it's gonna make a lot more sense when we get into section 2, but we got to read this one first. Waiver of financing contingency, if buyer, so first thing one, if buyer fails to make application for financing for the property within the agreed time, section 2, changes the type of loan at any time without seller's prior written consent, or 3, changes the lender without seller's prior written consent after the agreed upon time to apply for financing expires, then the financing contingency shall be deemed waived. Buyer's waiver of the financing contingency under this paragraph 1B also constitutes waiver of paragraph 5, appraisal less than sales price. For purposes of this addendum, lender means either the party to whom the application was submitted or the party funding the loan. Buyer authorizes listing broker and seller to inquire about the status of buyer's loan approval with lender anytime prior to closing. Buyer will execute an authorization form if required by lender to accomplish the same. So here's the whole thing about how is the buyer going to waive it by default? What's the first one? What's the first way the buyer can screw this up? Or even the agent, like Aaron told us in the story. Fail to make the written application. There's the first thing. What's the next thing?
Changing lenders without the seller's prior consent.
Yeah, you change lender. You change lender without getting there's a couple caveats to this, which is very confusing. I want to make sure we covered these 2 other things. But if you don't get permission, then that's another way that they can waive it. What's another way they can end up waiving it? Switching the loan type without seller's written consent. The form to do that is 22AC. The way to kind of remember it is like, think AC, keep cool, don't freak out. Oh no, the buyer can't qualify under this. We got to switch lenders. Okay, keep cool, calm down, use your 22AC, and then you can actually keep the deal going. I'm going to hit you guys with trick questions. Can the buyer go ahead and change lenders without seller's permission before 5 days? Because they got to make written loan application. Can they do that without seller's permission? What do you think?
Yes.
Yes.
What? But we just read that if you switch without the lender or without seller's written consent, how come? Huh?
Yeah.
There's a 5-day window. The whole point, they have to make did it say with lender A? Does it identify a lender at all?
No.
All they have to do is what? Make the application within the 5 business days of mutual. So they can do that without permission. Here's another one. Another question for you. Hey, Zoom people, you guys can chime in. You're being very quiet today. Are you on mute? Jim says yes. Another question. let's say lender A, BECU says, oh, sorry, buyer, we can't approve you. You're done. Can they go ahead and change and go to Aaron and Leah without seller's permission?
Within the 5.
Yeah.
No, this is after 5 days. This is like day 15. Can they go and change?
No.
Yeah.
Why wouldn't they?
Wait, you're fine.
Close the deal.
You can't,
No,
because
you
they
can't.
can't approve you.
Yeah,
Denial.
but, yeah. Although that's, I think you can. Need to communicate,
Think
yeah, communicate and get everyone to agree.
you need it in writing?
No, but you're waiving your financing contingency. I don't know.
But they can't approve you, showing you a denial.
Let's hear Zoom people. Boy, you guys, you can unmute. Need seller approval. Romley thinks. Jim saying yes. Romley says no. Okay, I'll give it to you. Let you guys suffered enough. So actually, this is one that definitely gets people. In the event the buyer does not qualify, because what are they supposed to do? What's the statement? There's this phrase. They have to make a, what? No, good
Good
faith effort, right? They must make a good faith effort of obtaining financing. This is a trick one, and brokers, they don't get this a lot. In fact, I've sent Annie Fitzsimmons, Washington State Realtors attorney's video on YouTube about this probably like 70 times in my career. But seriously, in the event the buyer can't get qualified from the first lender and they're still within their time frame for their notice to perform, like their time in order to, get financing, the buyer can actually change lenders without permission. But that's with the same loan type, same loan, same down payment. If anything changes,
Then you gotta get.
you gotta get seller's permission to do so.
But you said in the time frame of like, the notice to perform. So like, if it happens after the 21 days,
Or until it's waived. I mean, and you're under client, you could still do it. You could switch lenders because the
Because it's
lender
denied.
denied them. Yeah, you gotta have it denied. Now, do we all think it's a good idea that you probably should be communicating to the other party?
for sure.
Yeah. And that's the part that definitely where brokers mess up. They're like, oh, great, if we say anything, they're gonna think we're waiving financing, bam, we're gonna get in trouble. I'm not saying nothing. I'll see if this new lender can get it done. I'll go home and pray and we'll see, we'll see if it happens. So it is definitely something that, a lot of people don't get that one right.
Well, switching from like a local lender to a big bank, some of the agents will kind of be like,
Yeah, oh, yeah,
how much are they putting down?
right.
Well, I think again, it's a fine line between when you notify and not notify, right? So
Mhm.
the cool part is if you got denied in one spot, you're pretty much okay. I mean, maybe I'm jumping in, but you have a denial letter that says, hey, look, I've been denied as far as money back. But
Yeah.
when it switch lenders, yeah, it's switching lenders, but then it might extend your closing date, right? So then you're gonna have to talk, it's a tough line because you don't want to panic anybody.
Exactly. I know, that's the part.
Yeah.
So just remember, in the event that they do have to make a switch, don't forget before 5 days, they can switch to anybody. They don't have to use the person they had the approval letter with written in the deal. But again, communicate that change. You might want to say, hey, buyer's got a much better rate. But if they're changing loan type and the amount down or the program, then you have to get permission. Even if it's before 5 days. All right, questions before we move past that one? We'll read the manual. If buyer fails to make application for financing for the property within the agreed time, or changes the type of loan without seller's prior written consent at any time, or changes the lender without seller's prior written consent after the agreed upon time to apply for financing expires, then the financing contingency will be deemed waived. So when you guys have a deal die, the buyer goes, you're the listing broker and the buyer's agent sends you over up the denial form and a form 50, say, oh, yep, or 90I and like, oh, sorry, buyer can't get approved and we're out. What are the three things you have to see in order for that buyer to get the money back? There's three things. And we've already like talked about all of them. Let's make sure you guys know that and understand it. Because we need this for our sellers. Otherwise, you don't want to sign off on it. What's the first thing?
Decline notice.
Nope. Well, I mean, that's part of it, but what was the first thing?
Yeah.
Say it louder.
Application.
Written application. They had to make application within the 5 days. So that's the first thing you got to make sure that happened. Because if they missed it, what happens? They waived it. And if they waived it and they can't buy it, what does that mean for your seller? They get to keep that earnest money.
So, okay, let's say the lender doesn't make the application till like day 7, right?
Lender doesn't make the application.
So
The buyer,
You have to buyer it.
the buyer does it.
Yeah, so.
We have to have.
But just like Aaron said, he's getting the deal, like all of a sudden the agents like didn't even tell him they got the deal. And they were thinking, oh, we didn't have to send it to him because it's a contingent one. And that was past the 5 days. You said it was like a week,
Yeah, 2 weeks.
2 weeks.
So it's really on the buyer agent to mentor your buyer, but once you have the address and the.
Oh, yeah.
That keep on.
So once you get mutual, that deal's got to get to the lender the same
Right away,
time, right away. You can't delay.
right.
Okay, that's the first one. Oh, you got a question before we move?
yeah, so, okay, so let's just say that the buyer didn't do it until like day 7, right? Didn't know, no one like knew.
Well, 5 business days. So don't forget computation of time. You could end up day 7 could be, they're still okay. So you really got to like bust out your calendar, full view of the month. When did I get mutual? Commencing day, 1, 2, 3. Oh, it's the weekend. Monday, 4, Tuesday, 5. Tuesday by 9 PM, they would have had to make their written loan application.
So if the seller doesn't give you notice to perform, and let's just say the transaction goes sideways, if no one knew that the application wasn't made in those 5 days, does the seller still get the money even though you weren't given notice to perform?
It's gonna depend. You wanna know what it's gonna depend on? If that was a good listing broker.
Yeah.
That's a good listing broker, and we're talking about these exact things right now. What are the 3 elements that's gotta be on that you've got to have in order for that buyer to get their money back? For the first one's written loan application, 5 days. What's the second one?
Property address.
It's the second thing.
Just Monday, right?
Mm-mm. Let's see.
Yeah, Monday.
Oh, this is the other part. Let me get to.
You have to make sure it's with the same lender.
Nope.
No.
Well, I mean, obviously, if they switch lenders without telling you, then you have to find out, well, did the first lender deny them?
Yeah.
No, they didn't. They got a better rate with this person. Oh, you changed after 10 days. You didn't get our permission. Waived. Now it's waived. Here, let me do this. I'm gonna give you guys the second one. Second one, buyer will lose earnest money for failure to have sufficient funds to close. Sufficient funds.
So somebody backs out on gift money or something.
Yeah. So we kind of skipped ahead, but let's read. This is where it's all at. Okay. I'm gonna give it to you guys. Earnest money, if buyer has not waived the financing contingency and is unable to obtain financing by closing after a good faith effort, Then on buyer's notice, this agreement shall terminate. The earnest money shall be refunded to buyer after lender confirms in writing. A, the date buyer's loan application for the property was made in, and this is the other part that 99 times out of 100, it doesn't happen. I'm dead serious. Where we go? Okay, application was made and also including a copy of the loan estimate that was provided to buyer. So you're supposed to get a copy of that loan estimate. That's the application. Isn't that what that is?
Well, the denial letter will have both. So the
It was
denial letter,
supposed to.
yeah, the denial letter.
Yeah.
So in other words, when you're gonna go through, if you're trying to either protect your earnest money or getting it, if you're on the listing side, you're gonna go through every one of those and put a check mark. Do I have one of these?
Yeah.
One of these. And so that's how they're gonna get you on if they make the application or not, because that denial letter will show the date of the application.
Yes.
If that date is after that 5 days, you're sunk, okay? The other one, you said, yeah, so you'll get, and then you'll have the initial disclosure, because they made the application, we have to disclose to you. Yeah, so it's just another way to confirm. You can't have a lender just like Chris denial letter to make it up, that's kind of what we're looking at, they also want to prove that the disclosure.
Well, or it's the date that they write.
Yeah,
They just write a date. They're like, oh yeah, they made it within 5, because lenders know.
yeah.
Lenders know like their deadline by default for our contract for this part, guaranteed. They're like, let me look at that calendar. What was the 5th day?
Well,
Oh,
so
yeah.
we have an address in 3 days.
Well,
If
we
they
have 3 days to
request-
make it, but I'm just saying,
Yeah.
if you made the application after that 5th day, then you'll have the denial letter with you can have the date on it, but that loan estimate will have
Mhm.
that date on there, and you can back it up 3 days, and it's after that.
Yeah, so here's so that's the first one. So it's those two things you gotta get a copy of it. Get a copy of the loan estimate that was provided to the buyer. Say, hey, you didn't send a copy of the loan estimate. Because that has the date on it.
Yep.
That's the reason why this is in our contracts. And I guarantee I go audit all of our files and the whole firm from every deal that died. You want to bet that probably 1 out of 100 has that uploaded in SkySlope. Because it's unfortunate because brokers forget that this is the part that you're supposed to get.
Well, doesn't escrow look at that too, or how does the refund come, I mean, sorry to go off topic, but I'm saying like, doesn't escrow look at that part of the contract too and say, we need, I mean, unless are they just directed by you guys?
They're directed by us. It's the Form 50. That's all they care about, or the 51, the rescission. So it's the demand of earnest money, like where's it going? All they need is a signature from both parties and they're like, we're out.
Okay.
We don't want it. We're not
Yeah.
reviewing this. Right? So there's the first one. Next is that buyer possessed sufficient non-contingent funds to close. Example, down payment, closing costs, etc. How are you going to get proof of that? How do you know?
Yeah.
Is that on the loan? Is that on your loan estimate?
Yeah. if they
Verified?
deny Based on not having funds.
Uh,
then
We just had one of
we have to
those.
disclose it.
We have one of those. Yeah. Yep. Non-sufficient funds.
Yeah.
Alright.
Hey, that's why we got you guys here.
Okay, couple different things.
Mhm.
There's funds to go, so here's the deal. I found $50,000 in a pot of gold downstairs, right? I want to use that for the purchase of the house. Okay?
Alberto's running downstairs right now. He's like, what pot of gold? Where'd you find that?
The thing is, there's 2 different, in my mind, there's 2 different kinds of assets. You have money that you can use for the down payment, right?
Hmm.
And the funds to close, but those aren't accepted by the lender. Right? So I had 500,000 in an IRA account. I'm not using that because I thought I had money coming in, but it's not, you know what I mean? Like I have other money to make it close, but those funds are not suitable for the loan in order to use. That kind of makes sense, like some loans,
Not just cash.
yeah, cash or other stuff that I have
Mhm.
that I think I can use that I don't have, but they're money, but they're not suitable for the loan. You know what I mean? They can't source those funds and those kinds of things. So sometimes they're like, hey, I don't have money to close. or I have enough money to make application, right? So I can show you, like, I got $1 million in an IRA account, but I'm not using that IRA money for the down payment and closing costs of this. So I did have money, but I'm not, that bank will not allow me to use that money in order to get the loan.
Well,
That kind of-
so I mean, that all comes back, let's rewind all the way back to last, 2 weeks ago, we went over the Jerry Maguire clause. It all comes down to, is that money in checkings or savings? If it's not, then you've got to disclose in the deal somewhere. 22EF is the form, the evidence of funds, you're gonna have to use that to make sure that it's the right, that you're disclosed. Otherwise, if you don't disclose that they were using that type of money, then they're in default from the beginning.
Like gifts, right? Like,
Gifts, oh, yeah.
I got 500 grand in IRA. I'm getting gifts from mom. Mom somehow can't use the money. Now I can't qualify as a gift. But I did have money. I mean, I got money over here for the loan, you know what I mean? But I'm not using those funds to make it work. So but if you're not protected, I can see how that might.
Yeah.
So if it's disclosed up front, oh yeah, my dad's giving me the money. And then the dad decides, oh, I don't like the house, I'm not gonna give you the money, and this is later in the deal. So how is that supposed to play out?
Well, I mean, that all goes along with the 22EF, right? With the evidence of funds addendum. If you're not disclosing that the buyer does not have Jerry Maguire clause, checking, and your checkings are in savings. Oh, no, actually, I'm getting, my dad's giving me money. See, that's the part, like, it's all cash, I'm getting cash from my dad. Oh, that's great. How much? 30% down. Okay, cool. Is that in your checkings or in savings? If you're not like talking to a client that way, you're gonna fall in the trap.
But how do you, if you have the seller, how do you protect your seller if they're telling you that?
Oh,
What
oh.
do you have them provide?
I love this. We talked about this. It's like, you're representing the seller. How do you know they have the funds?
22, yeah.
That's the only way you're gonna get to know, because they'll have to prove it, that they have it. That's why Annie said literally every deal probably should have 22EF in it. That you can counter with that.
Because those contingent funds say, obviously, if dad backs out, doesn't give you the money,
Yeah,
you're protected because you've disclosed it's contingent and I can't get the money, so therefore.
then you're
I could
protected.
if we had it, I can't get it now.
Yeah,
That's
you're
your
protected then.
fault for selling
yeah, you
for
only got so
selling.
much time to get it. In the event you can't get it, then you're protected.
Or sometimes people take a loan against their 401k and then
Yeah.
they get delayed
Yeah.
because they didn't start the process soon
Yeah.
enough, but.
Another question.
Uh,
So I have a buyer that wants to make an offer, but they had sold their house in Austin and their proceeds is in a CV that they can't get until January. So is that this form, 22EF? Or is that like
100%.
contingent on getting it?
no, that's
So it's just
22EF.
22.
Yeah. You have to disclose, unless it's in checking or savings, US funds. You've got to disclose. Otherwise, buyer's in default. And if they're in default, what are they gonna lose?
Keep buyers doing.
All right, now the very last thing, we did that the buyer, this is the tough one to prove. And how do you prove it is if you had maybe 22EF in there, that you got the proof to know they had the funds. Because otherwise, if they don't even have the funds, why are you taking the house off the market? See, you connected the dots. Mhm. But so many brokers don't. Seriously. How do you even know that? Oh, it's an FHA deal. They got their 3.5% down. Do you see 22EFs in those deals?
If they're getting any gift funds on
You
FHA.
have no idea.
you gotta source
You don't even
that.
know.
Yeah.
All you get is a letter from a lender says, yep, we've checked their assets, their
Yep.
social security number, their credit. Now we got an address so they can make written loan application
And even with a full loan
approval.
commitment,
Yeah,
like when we do full underwriting, right? Technically, if they're getting any type of gift funds, all the other person has to do is sign that they're gifting the funds.
Mhm.
So that could
Yeah.
fall apart.
yeah.
Yeah.
All right, so the last was on and C is the reasons buyer was unable to obtain financing by closing. So that is the denial letter. So that's the third element. So you need to have all three of those. And it's a good idea for you representing a buyer to understand fully what is going to be needed in order to protect their earnest money. If you're writing a deal, you gotta have all three of those elements. If seller terminates the agreement, the earnest money shall be refunded without need for such confirmation. So if the seller ends up terminating, which is rare, but it has happened. In fact, we almost had one last week. So it's one of those things. Okay, let's get back to. Okay, this is the section we got to jump to now. Okay, here's this. Okay, we'll do 9. Karen, you want to do 9?
Financing contingency, seller's right to perform. Check the box if applicable and insert the number of days that seller must wait before seller has the option of delivering the notice to perform. After that time period has passed, seller may give the notice to perform at any time. You want me to wait?
Nope, keep going.
The notice requests that buyer waive the financing contingency, and if buyer does not earlier do so, seller may terminate the agreement anytime 3 days after the delivery of the notice. After seller gives the notice to perform, buyer will have 3 days to decide whether or not to waive the financing contingency. If buyer does not waive the financing contingency within the 3-day period, seller may unilaterally terminate the agreement anytime thereafter by giving a second notice. Please note that buyer's ability to waive the financing
Sorry.
contingency is not limited to the 3-day time period. However, after the 3 days, buyer is at risk that seller may terminate the transaction at any time.
Mhm.
Oh, note.
Note.
This is a long one. Someone else should read the next. There's like.
All
2
right,
more.
Jonathan, you want to take over for note?
Note and termination, or just note?
Note. Yeah, this one right here.
There's always a risk to a buyer who waives the financing contingency, but it may be the only way to prevent seller from terminating the agreement. If buyer waives financing for any reason, buyer cannot obtain financing. For example, if the buyer cannot satisfy the conditions of the loan approval or some other glitch arises, then the buyer still will be obligated to proceed with the purchase and could not forfeit that earnest money.
Could forfeit. Yeah, they could forfeit it.
Oh, they could forfeit that
Mhm.
earnest money or be liable for specific performance or damages. If buyer does not timely close, if buyer does not waive the financing contingency, it survives the closing date.
So there it is again, put it into that, it will survive even the closing date. So a couple things we got to break down in this one. Okay. So notice to perform, this form is form 22AR. 22AR is the notice to perform by seller. Seller can give that at any time after the 21st day. That's by default. So most buyers, if you're writing up a deal, you're going to do notice to perform, seller's notice. So the differences between A and B is the fact that B, you don't have to issue anything. Upon this day, it ends. The financing contingency it's waived on that time. So, in high competitive marketplace, you could have deals where, if the buyer's 100% fully underwritten, approved, and they're done and they're ready and they can close like in 10 days and they're, gold, then you could mark automatic waiver and you could put 0 days here. And you can also protect them still about their appraisal, and you'll say will not. So if financing is waived, then also low appraisal is waived too. You can mark this as will not to protect them just in case if it hasn't happened yet. But this is a way, this can make your deal really, really, really strong. As long as the listing broker understands our forms. And that's the part that you might run into where they don't understand it and they're like, oh, you had a financing contingency in here. We're like, well, no, actually, we waived that. No, you didn't. You have a 22A. Did you read what we filled in? We marked it as B and we put 0 days. We've waived it. The only thing we're saving is a low appraisal. Oh, I didn't see that. How did you do that? Read the form, understand the form. So you can do stuff like that to make your deal stronger. Let me go back up to that part.
And if you call Aaron and I and we put together this, offer, if you want to waive financing and do all of that, typically we'll call the listing agent and go over
Oh,
what
here
we're
we go.
doing, so that,
Yeah.
we're on a team here.
All right, so notice the form is that form 36. And again, if you're using A, don't forget, it goes forever until it's waived. And you've got to use that 22AR for the seller to sign off. Now this, I'll tell you guys a true story that happened. It was in Bellevue. Back when it was very competitive, very competitive. The Northwest MLS had to update the form because them almost getting, well, I don't know quite if they got sued, but there was a Windermere broker and let's see, did we represent seller? Oh yeah, we represented seller. So we had, our listing broker was in Bellevue and it was a Windermere broker represented the buyer. They had the deal. It was, I can't remember, did we, hey, hold on. I'm trying to think about the story to make sure I tell it accurately. Okay, so. I don't remember how the heck they did this. Maybe it was the other way around. No. I'm trying to, there's part of that I can't remember, but basically the Windermere broker gave the notice. The form used to state seller shall give the notice. Right? So they issued the notice and they said, no, we're not waiving it. Right? Can they do that? And the buyer, yeah, the buyer can. They can sell that. But guess what happened? Better deal came along, all cash. So what did the seller do? Terminated, and they were pissed. And ours is, well, the form says that we shall. It didn't say may. So it used to say shall. And we say, hey, we're following the rules of the form. That didn't sound good. So they issued us up, but then when that happened, they thought that it was the thing that we were trying to like pull over on them, but it wasn't that. It's like, we're following the rules. And then all of a sudden, when we had that offer, we're like, oh my God, we can terminate on them. We can take this. So they got guaranteed money. They moved forward. They fired, and then they were mad. They're like, well, we followed what it was saying, even though we didn't issue it, but it still gave us the right. But they were mad. So Windermere was angry, and they went and they said, why did you guys send it? They're like, well, it says that we shall, we had to. And a lot of times people were not sending them. Remember? They were not doing
They're
it.
like, oh, I don't wanna,
Yeah.
I'm gonna be careful.
I'm gonna be
about this,
careful.
yes.
I'm gonna be careful like this. And this change happened about 6-7 years ago, somewhere in there, or 5 to 7. I don't know, somewhere in there. But anyway, they had to change the forms to basically, because of that one thing that happened.
Wow.
Well, that one deal that happened in our firm. So the key word now is the seller may give the notice. So they may or they may not. They don't have to. But it is very interesting that, you know, for those types of situations that can happen.
You're just protecting your seller. I mean, if you're
Yeah.
listening saying, I get a better offer,
That's what I'm saying.
and this person can't perform, I'm concerned they can't perform, who knows?
Yeah.
But, you know,
Well, the whole thing too is okay, I will say this. Listing brokers, listen up. When you get a deal and you get an offer and there's a 22A in there and you're on the finance contingency and the buyer has marked option A, right? Oops, sorry, went to the wrong one. So they went to option A and 2. So seller's notice to perform. Let's say they put 21 days in here. What is your job, listing brokers?
Follow up in 21 days.
Yeah, you better damn well follow up to the seller and say, okay, seller. Last night, 9 p.m. was the 21st day. Today's the 22nd day. This is your rights. Here's this is what this form is. It's called the 22AR. This is the notice to perform. Now, some buyers might feel very, like forced, like, oh no, the appraisal's not even done yet. It's supposed to be back. They went and did it, but we don't have it yet. What do you want to do, seller? That's the part that's not happening all the time. And you definitely do not want to be that broker that is in the situation where the seller's going to bring a lawsuit against the buyer later and the attorney's reviewing everything. And all of a sudden the attorney goes, oh, well, when did you guys send your notice to perform? And the seller's like, what's that? Oh, well, your broker on the 22nd day, you could have sent this and you could have been done with them instead of being stuck in the transaction for 3 months because they kept extending and extending and extending and it cost you all that time and damages and money. What are they going to do? Who are they going to look at then? They're going to look at a listing broker. They're going to be pissed. They're going to be mad at you. So you got to make sure that you are doing your duties and following all the timelines in the contract to make sure that sellers is being notified of their rights.
what else helps too, though, I think, if I was a listing agent, I would always mark that thing like 14 days. Because I want to make sure I'm working with somebody who, the appraisal's the appraisal, right? But I don't want to be monkeying around and taking a house off the market for someone who can't qualify for the loan.
Yeah.
I would like to know within 14 days, the lender should be at least able to have a credit, income, and asset verification, you know what I mean? They should be able to have that.
Mhm.
Then I would feel okay with that, because if something happens, you go back to your seller and the deal blows up, you're like, how are we in this situation?
Yeah.
Oh, because I didn't follow up, you know what I mean? It's just a good way to protect yourself, and then you're dealing with the client. If something happens, you can get the house back on the market in 2 weeks.
Mhm.
If something was happening, so.
Yeah, Eric's bill put 21 days.
Yeah, it's defaulted to one. This is the reason, you guys remember, what was the old default days? How long was it before?
30?
It was 30.
Yeah.
It was 30 freaking days. That was way too much.
Yeah.
That was way too much. That's what I'm
That's
saying. That's what they were doing. And see, that was the part of the forms committee talked about this, and they were saying that, hey, they gotta be like, they should have this figured out whether or not they're gonna have this loan by a much shorter time.
Yeah.
I think originally they were pushing for 15 days, I think is what they wanted in here, but people are like, oh, that's too great. You cut it all in half. Now you put too much pressure and the buyers aren't gonna wanna waive. That's gonna cause deals like to fall apart. So I can kind of see what they, like the argument in that. Because the buyer's like, all of a sudden you're 15 days in and you got the 22 AR and you're waiving financing already.
That's tough, I mean.
That's tough.
No lender, right, because you don't have the appraisal back.
Right.
But the thing is, we have them fully approved, not to hype ourselves, but I'm saying if we have them fully
Yeah.
approved, that 15 days is nothing, because we'll have that appraisal back before, and it's just a way to protect and to be competitive.
Yeah.
Someone else who's unwilling to do, and that's what I'm saying, if you have someone who wants a short contingency, that's retracted to the seller.
Yeah.
Hey, we can perform on this, we have it fully approved, all we need is the appraisal, and we're ready to go. So we get the appraisal back in 7 days. Right?
Yeah.
So that's.
How many days from that your experience typically from when they waive inspection that you get the appraisal back? Say you.
I-
order it
there's
the
a couple
very-
of-
the Very next day.
If you're doing the inspection, I typically would try to order you only get charged to the buyer.
Yeah.
If the appraisal is conform, right? So if we order an appraisal and we cancel it before the appraisal's gone out, so there's no fee. But typically, I'm not beating around the bush, I'm just saying.
Yeah.
Is that I don't order the appraisal until you're sure,
Bit of water.
after the inspection, right?
Right,
It's sort of
so
like-
I call you and say, hey, we just passed inspection.
Yeah, order the appraisal, I can get it done within a week and a half, 2 weeks.
Or you like waive inspection, then we just order
We get it
Usually
sooner
we
than that, you just have to cost more, I mean, the default is about 2 weeks. If you want it sooner than that, if you want it in 7 days, it's probably cost a couple.
How many
$100.
days are you finding after
it. It's
inspection?
$400 to like rush an appraisal.
No, I know that,
Oh.
but that's what I'm asking is. For agents timing, right? The agents wanna know. Cause how I play it is, I say, go ahead and order the appraisal, if it's like a week out. And then if we don't pass inspection, I'll call you either way, right away, to cancel it or to proceed.
Yeah, and that's what we do. We would
For
just-
efficiency's sake, because sometimes I've waited till we pass inspection, say day 7 after all the negotiations, so we finally pass it. Now you're ordering, now you're a week and a half out, and now you're pushing up against the 21 day.
Yeah.
Well, yeah, depending on what you want, so that's that's part of the discussion we have up front. Hey, if this house is really good shape, yeah, it's great, it should be really noticed, it should be appraisal, or with the inspection, fine, I'll just order it. Or if it's like, hey, there's some stuff going on here. Okay.
Then you're waiting.
Yeah, then I'm like, hey, it's a tug of war, because you don't want to waste the client's money. But again, if the appraiser goes out there and performs the appraisal, then we gotta pay, then we pay for it, but if it's not, it hasn't gone out there, we can cancel it pretty much anytime.
Sometimes the appraiser goes out so quick and gets it done in like a few days.
Oh, I know.
Well, but I
It's
said,
slower lately.
yeah, these guys are one business too, right? And I think the faster they perform it,
They'll get more
we're
deals.
gonna use them again, so it's just kind of,
Hmm.
usually ask the client, how bad is it? If something comes back on this and you're not gonna buy it, no, I really wouldn't buy that one.
All right, let's jump to option B. We talked about it briefly. Let's see, Tony, you wanna read 10?
Number 10, financing contingency, automatic waiver of financing contingency. Check the box if applicable, insert the number of days before the financing contingency is automatically waived. Section 2B provides that similar to the other contingencies in the agreement, the financing contingency is automatically waived after a certain number of days, 21 days is the default. If buyer elects to terminate before the contingency is automatically waived. In order to be entitled to the earnest money, the buyer must provide written confirmation from the lender showing, 1, the date the buyer's loan application for the property was made, including a copy of the loan estimate that was provided to the buyer. 2, the buyer possessed sufficient funds to close. And 3, the reason the buyer was unable to obtain financing by closing. No. This option contains significant risk for the buyer. If the buyer agrees to automatic waiver, the buyer should make sure to carefully select a lender and make complete and thorough loan applications as early in the process as possible. There's always a risk to the buyer who waives the financing contingency. If the buyer waives financing and for any reason buyer cannot obtain financing, for example, if the buyer cannot satisfy the conditions of the loan or approval or some other glitch arises, then the buyer still will be obligated to proceed with the purchase and could forfeit the earnest money or be liable for specific performance or damages if the buyer does not close. If the buyer does not waive the financing contingency if buyer does not waive the financing contingency, survives the closing date.
Yeah, they kind of missed a
Waiver.
word. You don't have to do this one. Yeah, like they missed a word, I think, there. If buyer does not waive the financing contingency, it survives the
survives the
closing
closing
date. That, and that goes back to the thing, but did you guys catch that key thing that Tony read? And this is to that answer to that trick question I asked you about earlier. If buyer, first lender denies him, what are they supposed to do? First lender denies them. They've got option A marked. They have 21 days. You're in day 10. First lender's like, we can't do this. We can't do this loan.
Oh, it's day 10?
Yeah,
Okay.
Notify the seller agent, right, the listing agent.
buyer will still be obligated to proceed.
Holy moly.
I'm not using the elevator.
Earthquake.
That's terrifying.
That did not sound good.
You're hearing screaming, so that's okay.
Yeah.
You're smoking here.
Yeah. Elevator A.
So,
That's the one.
I mean, you could technically, if you're the listing broker and then you get that denial, they're like, well, you still got 15 days. Go use my lender. Here. Well, buyer doesn't feel comfortable, blah, blah, blah. Well, hey, in the deal, read the form manual. It says buyer will still be obligated to proceed with the purchase. Right? If buyer cannot satisfy conditions of the loan approval. What does that mean to you, Aaron? If they can't do what it says in the loan approval? Like in the denial.
Well, there's conditions for the loan.
Yeah,
So
conditions.
Conditions, conditional approval, conditions that you give me this or X, or what if you can't fund those,
Yeah,
then we would be denied the loan because it's either credit income an asset that we can't document. It's an income, hey, we need this letter of something, we didn't get it, or you can't, whatever it is.
mhm. Or something from the IRS, that kind
Yeah,
of comes up a
or
lot, right?
Anything else, I'm trying to think whether kind of crazy, like we need, maybe there's some kind of inspection piece, I don't know, I mean, just something on the appraisal piece or something like that.
Yeah.
And it rarely happens, that you can't get the document, but maybe, I'm trying to think on the loan that we had, it was sort of like, she's self-employed.
Oh,
We had, she was 1099 employee, or she was self-employed and worked for REI,
uh-huh.
did benefits for them. Well, then she wasn't really on a contract, right? So the underwriter, hey, we need a contract. Well, they don't have a contract. Well, you know what I mean? It's stuff like that, where like, it's just some boilerplate stuff that we can't provide, and we can't get it done, and therefore, you can't get the conditions.
What's a couple scenarios you've had where you had one person was denied somewhere and they came to you and you got them done? Can you think of, I don't know, like a story in the past? Or-
Oh, yeah, I mean,
Yeah, not being able to document funds and then just making it a gift or. you
or
know,
maybe
like-
the other loans, sometimes, a lot of sometimes the underwriters, their eyes get burned, right?
Yeah.
Oh, I saw this, can't unsee it, you know what I mean? Okay, well, because maybe the loan officer didn't structure it in the right way, hey, it's gift money, but it's not gift, you know what I mean, something like that. Oh, I've already seen it. So
The
then-
job of a loan officer is basically to like protect their client from an underwriter seeing something that they shouldn't really see or putting something together and showing an underwriter that could cause a denial.
Package is nice.
Yes,
Yeah,
so you're
that's
putting,
good.
you're painting the story for an underwriter.
Or maybe sometimes so what we do.
Is that why you have all those smoke and mirrors in there? You like put a whole bunch of mirrors up and like, look at this.
Here's the file and the fire that.
And the little bows.
Yeah.
A lot of the
Put a
times,
bow on it.
a lot of the times the programs are the same for government guidelines and stuff like that.
Yeah,
But sometimes these bigger banks put overlays, so basically,
Ah.
what happens is that,
Right.
the way I can describe it is that the government says we go to the edge of this table, okay? Anything past this, we won't buy. But some other banks might say, you know, instead of going to the edge here, we're gonna stop here, or we're gonna stop here, or we're gonna stop all the way over here. Now, that bank says we can't do it, but I'm like, yeah, government says we'll go into here, so let's
go.
let's go. So that's how we get stuff like that, we don't have
Ah.
overlays, a lot of their banks might have.
Yeah.
So it's.
That makes a lot of sense.
Nice visual.
I know, good
It's
job.
been a
I
long time
He's good
trying
at
to.
don't know. All right, let's get, okay. Okay, so waiver of appraisal. Provisions on the appraisal are part of the financing contingency. The parties need to negotiate whether buyers waiver the financing contingency under section 2B also waives the provisions on appraisal. If buyer agrees that waiver of the financing contingency also constitutes waiver of appraisal and buyer waives the financing contingency, buyer will not be protected by appraisal provision should the appraisal be less than the purchase price. Realistically, you just don't want to, you don't want to mark either one of these as will. And probably 6 or 7 years ago, the MLS was like, hey, I know, let's make these default, then it'll be will. You remember this?
No.
Yeah, so yeah, there's gonna be defaulted, that everything will be will, and then the brokers, all they gotta do, you guys, They just have to mark one little box to say that it will not. They'll do that, right? Oh, yeah, yeah. What do you think happened? No one was filling it in. Yeah, no one was filling it in and it was saying defaulted to will. So no one was marking it. So it backfired on the forms committee. They're like, oh my God, this is bad. Now everyone's waiving it. We've already had, things earnest money interpleads, for deals and because it dealed it in appraise and the buyer didn't even have money to cover it. And it says now they're saying it doesn't matter. They're going to pay the difference. So they literally had to amend the form, flip it around and say it's going to default to will not, if not filled in.
Which section are there? I've got one, which I can't see all the way over there.
We are on, well, either one of these.
Is it the appraisal list and sales price?
Yes.
Okay, got it. I've got one here.
Oh, you actually have one.
Yeah,
Oh,
I
you
just
do.
want to follow it so I can see.
Nice. So again, you do automatic waiver, you're choosing the date of when this will happen. Most of the time people are still doing this, but you have to remember, you've got to issue the seller's notice to perform by the 22nd day. I mean, after this timeline's done, you can send it with the form 22AR. But again, it's the key word is may. Seller may send it. So listing brokers, make sure you're explaining to your sellers that they have this option available to them. As soon as you don't do that, now you're not doing your job to let them understand it. Also, you need to convey to them how is this can be, bad for the buyer might go, I can't waive. I can't whoa, I do want to move forward and everything's going good. But, then you probably won't. Maybe you don't issue it, but you got to have that conversation with your seller. How are you going to know things are going great? Talking to the other agent. That's a piece to it, but what can you get who can you go directly to find out how good it's going? The lender. It says right in the deal, you're allowed to communicate to the lender. Now, does that mean you're going to blow them up every day?
Yeah.
Hey, I'm checking in. I want to know what's going on. Where are we at?
Case by case, right?
Yeah, you probably would want to have as a case by case kind of scenario, but it's definitely, I mean, if you remember before the forms revisions, we used to have to get permission. Remember that? And you had to send the thing. And then the funniest joke ever is, here you go, buyer. Here's the form. Can you mark the boxes of everything that's been done now? Do you guys remember that?
Was that the AL, the
Yeah.
AP?
AL and AP?
They don't have it anymore.
No. Thank God. It was the dumbest thing ever. Oh, yeah, these are done.
No way.
No. And the buyer had no idea. It was a joke. That was don't get me started. All right.
So where is that, Eric, where you can reach out to the lender piece? Where does it say that? The other one, the other was it the AL? Where at least you gave authorization for the lender to talk to. See, that's the other part. You might have a lender that might be control, hey, I'm not gonna tell you what's going on as a listing agent, because they're not part of the contract.
So there's two, no. We already read part of it. It was process designed. This process is designed to allow communication between the parties about the status of buyer's financing, so the seller is not forced to make decision to terminate in a vacuum. After seller delivers the notice to perform to buyer, seller can press buyer to waive financing or provide seller with information of buyer's loan to make seller comfortable with buyer's financial standing. Buyer will be motivated to keep seller informed so that seller does not terminate the transaction. I think it says, hold on, we go to the lender. Oh, shoot, it's in here 32 times. 32
No,
times.
that's fine. I was just curious where.
Information. Oh, it's going back into the other part. For purposes of lender means, the party of the submitted party funding the loan. Buyer authorizes listing broker and seller to inquire about the status of buyer's loan approval with lender anytime prior to closing.
Which section is that?
That is, it's section 1B, line 20 and 21. There it is.
Yeah.
Yep, so they can call you anytime. And you definitely should be communicating. If you're not getting communications, another part where listing brokers fail. And both brokers fail at this all the damn time. You heard Aaron tell us about the disclosures that have to go out before or at the application point and also right before closing, right? Of the actual costs of their closing disclosure, right? So he told you how many days they have. How many days is it? 3.
Yeah.
3 when?
It's like halfway.
3 business days, well, pretty much, besides the Saturday.
Well, closing disclosure.
Closing disclosure, right? It's 3 days, but it's before closing. So 3 business days before closing, what should you be doing? What's listing broker? What's your question? Who are you calling? What are you saying? Say it louder.
Did the CD go out,
Yeah, have the disclosures gone out to the buyer? But when are you doing that?
3 days prior, or I would even ask, like, maybe a few days before, like 5 days, to be like, hey,
Thank you. 5 days before closing, or even the week of closing, before the closing date, listing brokers. Pick up that smart computer that's in your pocket and dial the lender. Has the closing disclosures gone out yet for the buyer? And what if they say no?
They're saying that.
When is it?
When is it going to happen? Oh, it's not gonna happen for probably like 4 more days. What does that tell you? You're not closing on time. The worst thing I always hear, and Tony hears it too, is, oh man, tomorrow's closing. Or today's supposed to be closing. It's either that or I'm not joking. This is what we hear all the time. Oh, well, when did the disclosures go out? Well, they haven't gone out yet. When did you find that out? Just now. You're already late, listing brokers. You should have already freaking done this at least 5 days before closing date. What were we gonna say, Tony?
Check your weekends
Oh, yeah.
on the closing disclosure. Sometimes it lands on a holiday too, so this week was I already had this happen.
Oh, yeah.
Today, it's funny that you mentioned this. Guess what Friday is? Holiday. It's the observed holiday,
Yep.
so if it doesn't close tomorrow, Thursday, it's not closing. And I already had a call this morning, like a 20-minute call, explaining to one of our agents that it's not closing on Friday. They're like, everything's set up for Friday. Like, you're not closing Friday. They're like, what do you mean? I'm like, it's an observed holiday.
Yeah.
He's like, the CD went out on time. Like, it went out on Monday,
It went out on Monday.
so they can't sign till
Thursday.
Monday to today or tomorrow, but
And Wednesday.
now they
Thursday.
have to.
Oh, you'd be okay then.
And it's, no, it's.
But
not-
you can't, but they
it's
can't
not
close it.
table funded.
Oh, geez.
So they're screwed up. Now they have to wait till Monday.
Yeah, see, it's, you're gonna run into this all the damn time. I guarantee it.
So if you're running into a holiday or a weekend, make sure the closing disclosures, and the second question is it table funding? Can they fund the same day?
That's a good one too.
This table.
They should be able to, they sign on Thursday.
They sign it, it's already at escrow.
They're stressful.
Some lenders
They
sign
require the whole docs to come to them.
to them, And then they'll release the money.
And then they release the funds and then they send them back. It's ridiculous.
It's
that they
really
do.
fun. Huh.
Yeah, I
Most
mean,
of
I
the
guess-
time, the funds are in escrow, but they won't give permission to release them until they review and have the documents in hand.
Yeah.
It's just, I mean, it's
Something
like
like that.
anything, as a good listing agent, I would think, there's two things. One is a good listing agent, you don't want them to blow back on you and think it's a horrible transaction.
Right.
This seller's gonna go, why do you know this? If you're doing it. The other part is if you're working with a good loan officer, you will notify both parties. We even keep both parties updated, right? Hey, CD's gone out, loan docs have gone out. We actually have an automatic email that goes out to both parties once the appraisal's back, docs are at escrow.
Yeah.
Everyone gets those, so you have an idea what's going on, right? So we typically talk to listing agents, say, look, just so, because we want their business too, right? So we're gonna reach out to them and just say, look, here are the benchmarks that have been done, so you're not blindsided at the end. Where it's like, hey, it's Thursday, where's money? Stuff, you know, that kind of stuff.
So first timeline.
So why do you think that like listing agents or even like buyer's agents are really like doing, you know, these sort of things, like when I've been representing a buyer, I don't think I've ever had an agent say, oh, here's a notice to perform, you know?
Is there no work for John O.
Is it
Scott?
like?
It's training, right? Training.
It's understanding the forms, it's understanding the rule. It's, yeah, I mean, if you don't have that knowledge, it's getting missed. Or
You came from Remax, that they do these classes.
No.
It's a training that's involved in their training. When I was with Remax, way back when, they didn't do these classes. So a lot of these places don't give you the proper information, and this is why these forms are made. Is so for protection for both buyer and seller.
I would think, you know, like every brokerage would have these sort of classes where, you know, their agents to like understand what's going on and how to do business, you know, because it's a liability to the company too. But no, I like Remax, we only had a monthly like sales meeting. You know, that was about it.
Or they make you pay for these classes.
Well, I mean, you guys, there's a million choices out there. It's like anything, it's like any commodity. And you could buy a t-shirt from Walmart, you could buy a t-shirt from Nordstrom's. What's the difference? I mean,
Quality.
quality, but why, I could get this shirt for $5.
Yeah.
That's
Uh,
cheap. I got a shirt. Why would you go to Nordstrom to get?
It's the quality, the service, the knowledge, the longevity of the product. I mean, you're pretty much buying luxury. That's what you're selling. So, right, either gonna go to Walmart and get no help, or you're gonna go to Nordstrom, hey, can I help you? Let me find this, they cater to you. So you gotta think about that luxury experience. It's the same thing.
It's the value proposition that we try to bring to you guys. If we're not doing that, why are you paying John L. Scott?
You're building the BVs, building value.
It's the same thing. You've got to do the same thing for your business, you guys. What, Aaron?
Then, yeah, but they have a lower rate.
Huh?
Do they have a lower rate? Do you wanna go to Walmart? Do you wanna go to Nordstrom?
You
Our
pay,
rate's slightly higher, the quality that you get, but you have a lower rate. The other thing's got a lower rate.
you pay for what you get for it.
There's more to it than just rate. There's the experience and everything else, protecting yourself, protecting earnest money, and all that good stuff that you do for your clients. And so, it's like, I can get a flight to Miami for $20, but I'm not sure the plane's gonna land. You know? Or I can spend $450.
Or the pilot could be on mushrooms.
Yeah, or, you know, I could take the $500 and have a little fun experience.
Oh, yes, Bromley, you're absolutely right, man. Service needs seller's approval. Gotta do it. All right, let's continue. We're almost done. We're almost through it, you guys. I appreciate the kind words. All right, loan cost provisions, number 12. Whoops, going the wrong way. Let's see, Alberto, you wanted to read 12?
Yeah.
Get you.
Loan cost provisions, enter the amount seller agrees to pay towards buyer loan or settlement costs, including but not limited to prepaids, loan discount, loan fee, interest buy down, financing, closing, or other costs allowed by the lender. This amount includes any amount that the seller will pay for FHA, USDA, or VA loan costs. For FHA, USDA or VA loans, seller will pay up to $300 of buyer's loan costs for that portion of buyer's loan and settlement costs that the lender is prohibited from collecting from buyer under FHA, USDA, or VA regulations. For VA loans, unless the parties agree otherwise, seller will pay the full escrow fee for closing of the transaction if the amount entered is insufficient to cover those amounts. Seller is still obligated to pay those fees for FHA, USDA, or VA. Loan costs. Yeah, let's see, loan costs. Buyer waiver of financing or appraisal contingency does not change the parties' obligations, seller's agreement to pay for certain loan and settlement costs under section 3.
Okay, so did you guys even know that even by default, if the buyer is utilizing FHA, VA, or USDA loans right away, they're already paying more money for this deal. The seller's costs are going up. So first amount is $300 for FHA or USDA. And that's for, it's just part of the cost, like the lender's prohibited from collecting that amount of money from the buyer.
So with VA, it's just the escrow portion that the seller has to pay. It's like it's obligated to pay
More.
Well, no, it's on the other box here, that says you can check it.
Yeah.
So you check that box.
Mhm.
Make sure you look at that box when you're
Yep.
representing the seller. 'Cause
Yep.
That's coming in your commission if you miss it.
You're getting ahead of us, Aaron. You're going ahead, man. You're going ahead.
I'm checking the box.
Dang it. Oh, I was gonna get him with a whammy.
Oh, sorry.
I was gonna get him with a whammy.
Whoa, he has my business now.
Dang it. Dang it. All right, so yes, this is the section. If the buyer wants to get closing costs paid on behalf of the seller, this is the section you're going to do it. But remember, if you're doing FHA, VA, that there is the $300 loan cost is added. And if it's VA, by default, the buyer's half of escrow fee, which is how much about on average? Yeah.
Oh, it's
Anybody?
probably $2,600 for the full amount, split by 2, so 1,300 apiece.
$1,300 about, yeah, 1,300 to 1,500 is about the range, I think, right? What I hear.
$3,000. So
You know. So by default, if you don't mark this box, that means your seller is paying that for the buyer. We just had about 3 or 4 months ago, like right before, I guess it was the beginning of summer. We had a seller that was really mad. They were pissed. Like, why am I paying this for the buyer? I've never had to pay this before when I've sold houses before. Oh, we can't pay it because of, if it's VA, they're prohibited from collecting it. Really? Then the seller's like, well, I read it and it says if my listing broker would have marked this, then I wouldn't have had to pay it. We represented the buyer, thank goodness. Sorry, you accepted it. That's not our problem. Go talk to your agent. Listing brokers, if you're doing a deal and it's VA, you have to look at the contract and make sure that the seller understands that they're asking them to pay that fee. And maybe they're asking for closing costs too. So you need to add both those up and do a net, please. Listing brokers should always be doing a net proceeds for their seller. Northwest MLS tools, you can do it. Did I close all that already? So Matrix, financial tools too. There's 2 places to get to it, but it's up in here. You can get financial tools and you can do net proceeds for your client. They've got all sorts of different ones. Affordability calculator, buyer's closing costs, seller's net proceeds. These are the ones. Put in the price, do all this stuff, tab. It automatically puts in the cost for which county, for the escrow fee, everything. And in the event it's VA, boom. Look at that. I hit VA and it's like, boom. Oh, added it. There's the $300 buyer's escrow fee for VA. So they're putting it at this, but I didn't even put a dollar or purchase price amount. So please make sure you're doing that. And you should be doing that during your consultations on, if you're high and a low for list price, if you're giving a value range, Because then, and put that included in those docs. Upload those in the PDFs into Transaction Desk, so there's no way in heck they can never say, you never told me it was gonna cost this much.
Like a worst case scenario, like best and worst case scenario,
Yeah.
like how much.
Yeah, and you want to be a really good listing broker when you actually get the deal. Okay, seller, here's the contract in which the buyer submitted the offer. Here's what you will end up getting estimated based upon this offer, as long as everything you've told me is accurate. Your payoff amount, the interest rate, what's remaining in taxes, all that kind of stuff. Then it should be pretty dang close and you should be able to fill it in. But you gotta be looking at those key elements or you're gonna get egg on your face and the seller's gonna be really pissed when it comes to having to pay these other costs that they didn't realize. And another biggie, I mean, this isn't even a part of our form, but that's the, and we talked about it in Form 21 and in the multifamily past month was the charges and assessments due before closing. If you're representing a seller, that's another huge one that, oh my goodness, if you mark the wrong thing or you accept a contract before you understand what those costs are, it could be a whammy.
Well, before they changed the form, so this form actually helps you out, because previously you didn't have that box.
Oh, yeah, that was
So
never
you
there.
automatically toast if you didn't let the seller know, or the seller know that they're paying full escrow.
Mhm.
Now they give you the choice, and if you still mess it up again, they get like 2 boxes, so.
Yeah.
now you can opt out of it if you wanted to, or you could count, I mean, the other option too is if you really want it, then you counter with a higher purchase price.
Mhm.
And say we're gonna credit you 1,300, you know what I mean, like, you already have that built in, so.
Yeah.
Counter would be increased purchase price by 1,300 or 1,500 bucks.
Cover it. Yeah. Which would be a lot better to do. All right, 13, appraisal less than sales price. Section 5 contains an appraisal contingency for buyer, provides the parties with the process for notice, response, and reply if the appraisal is less than the purchase price. If the lender's appraisal is less than the purchase price, buyer may give notice to seller of that fact. What did it just do? Oh my goodness.
AI, damn it.
Oh, now. This thing is, I have no idea why it's doing this thing again. Uh-oh. Oh my goodness, now I can't. I'm sorry, you guys. I thought we fixed this. All right, section 5 also requires buyer to notify seller if the appraised value is conditioned on the completion and approval of appraisal work orders prior to closing. This notice gives seller the opportunity to address any work orders to remove those conditions from the appraisal. If buyer is unable to close due to an incomplete work order as confirmed by the lender, and if buyer has not waived the appraisal provision, then the buyer would be entitled to the earnest money. The notice of appraisal work orders is the brand new form, Form 22 AWO. And that can be used for buyer's notice. If there's conditions on that appraisal, you have to send that form now.
Oh, I did not, okay.
Yeah, it's a newer form that they did create because there were issues where they were. Buyer brokers are like, don't worry, buyer. I know how we'll get the seller to have to repaint the house. We're gonna tell them it's part of the condition. Hey, sorry, we can't get the loan unless you paint the house.
That's like, man, that's.
Oh, are you serious? Yeah, you're gonna have to do that. I'm sorry, man. They noted in the appraisal. Oh, dang it. Okay. All right, I'll tell my seller. Got him.
Man, I should
Got
have done
him.
earlier, man, what was the other ones, I could have just wrote a letter, hey, what?
Yeah. So now, you can't do that. You can't, now you have to send the new form and you have to include a complete copy of the appraisal. So there's, yeah, so
Oh,
they've
really?
changed, yeah, so they can't get away with that stuff anymore. You have to show the proof. You gotta lay out you gotta show your cards.
I understand, okay.
So
The
that,
reason why I ask that is because sometimes you don't wanna let the seller know.
right,
The appraisal came in higher.
right.
Right, then you're like, well, I don't want them to be pissed at, you know, you just wanna. Interesting.
Yeah, so there's some things that, yeah, you gotta be careful about. Select whether the buyer's voluntary waiver of the financing contingency will or will not also waive the appraisal contingency in section 5. If the parties agree that the appraisal contingency will not be waived, that contingency will continue throughout the duration of the transaction, even if the buyer decides to waive the financing contingency. Please note that the buyer's waiver financing contingency in section 1B will still waive the appraisal contingency in section 5. If they end up waiving it, and then that box was marked that it will, then they're waiving the low appraisal too, so don't play Russian roulette. Initial and date. That is it. That is the form. Thank you guys for staying a little late and sorry about the technical difficulties. We will see you next week on the new buyer's agency agreement. Thanks, guys.